Welcome back to the channel. I'm Foreman, and in this week's video I'm going to be telling you the UK stocks I'm buying right now and the UK stock that I have actually sold. And if you like the video, please drop one of these to help beat that YouTube algorithm, as it is much appreciated. Now, I didn't even realise the stock market closed on Friday at 12:30. I was going, why are my shares not moving? But it was obviously New Year's Eve and the market decides that it wants to shut earlier so that people can go out drinking a little bit earlier on and get absolutely slaughtered in the evening. Regardless, in that mind, I have underperformed the markets this week. My portfolio in the last week has dropped by 0.27%, but it's only been 2.5 days of trading, and I don't really think that is good enough really to quantify a week or really even measuring performance to say anything. We've also seen the FTSE 100, the FTSE 250, they've both increased by 0.17% for the FTSE 100 and 0.9% for the FTSE 250. The US markets are down 0.5% to 1% in the last week, but again, they are likely very much open at the moment of recording this video, and so I can't really track too much against that just for this week alone. I've made some changes to the spreadsheet. There is a link to my Patreon if you're interested in getting access to this yourself and seeing all of my transactions, but there are some things I do need to change. As you'll be able to see, I no longer hold Argo blockchain. I sold my remaining 1,000 shares. I didn't do this out of fear, didn't do this out of panic. Instead, I'm realizing that, hey, look, I really don't understand Bitcoin. It may have gone up in the past, but I don't know why it would maybe continue to go up. So I might as well just sell, take the losses that I have, and just walk away. Because ultimately, I think that was the wisest thing I could have done, knowing that I'd made a mistake earlier in the year. If you're interested in my greatest mistake, I'll leave a card at the top right of the video. So I'm not going to try and hide or mask that loss. That was a mistake, that was a loss that I've taken, but I'm going to redeploy the capital elsewhere and make good use out of it. At the moment, I have £1,686 in cash. This is through my monthly deposit and also selling up the remaining proceeds of Argo blockchain, and so I now have less than 10% cash in my portfolio. This will likely drop down over the next month as I'm investing into my stocks such as Boohoo, for example, as there's no real reason at the moment for me to hold cash if my largest holding is significantly down for reasons I believe are perhaps less permanent than a lot of people may expect. Actually, that's the wrong way of saying it. Are pretty much temporary for the medium term, and so I'm going to be continually investing into that and lowering my average, especially while shares are down 34.65% from my average price. With that in mind, I bought 205 more shares this week of Boohoo, slowly but surely chipping away but scaling down to avoid any volatile movements. It does mean, yes, if Boohoo suddenly climbs 20-30 pence to £1.50, yes, I've missed out on buying some of the bottom, but it also means I have got some cash spare should the shares drop further on later in the month, which I wouldn't know if that would happen or not because I don't have a crystal ball and I can't predict the future of where these shares are going. Obviously, I've had quite a negative year. The last year has been pretty catastrophic. According to Freetrade, which I do not trust their performance at all, I think it is highly inaccurate, I'm down about 45% for the year, which I guess could be somewhat plausible. I've definitely dropped since quarter one. Quarter one, I started off, went quite well, and then it just went downhill and downhill and downhill throughout the whole year. And I'm not going to hide that, I have no reason to. And I've also gotten a lot more criticizing comments, a lot more hate comments over the last few weeks, whilst I'm in no way bothered by this. And in fact, I say bring it on, challenge it. Challenge everything I do on this channel. That's like what I expect. I am going to be looking over some of these as well because there's literally no news. There was a few things, I think there was a few companies on Twitter that had gone, let's say they were popular or they were trending for a day, but it was over news that was out of date anyway, so I figured what's the real point of investigating into that. What I did find actually is that, when Bitcoin is down 6.51% for the last 5 days, is that Hermes, yet again, you know, the most notoriously positive delivery company, are struggling to deliver. And there's been a few complaints with the likes of Boohoo and Pretty Little Thing and that, which is another one of their brands, that they're just not getting their parcels delivered. I think this is because Hermes has been shut most of the days from the 26th onwards, I believe, due to the bank holidays, so it's likely to do with that. But there is a mismatch there between the brands or the companies that are selling the product, the retailers, and also that of Hermes. Hermes are quite known as a meme. There was a TikTok I saw, and you had all of these like different delivery drivers. They put the parcel away. They mentioned Amazon Prime, who would deliver the parcel, open the bin, and chuck it in the bin and close it on you. But you also had Hermes that would just lob it from the car window and drive off. So yeah, there is obviously you pay for what you get, but it is what it is. Hermes, I think long term probably aren't the best suitable option for Boohoo. I would really love it if Boohoo were able to invest in their own warehouses and delivery infrastructure, but I do also understand if that may not be worthwhile, as it's a highly competitive industry, and I think it's not really, there's no growth in it. So they'll likely just have to lose some of their margins by setting off this job to other companies. I've also gotten a new book for this year. I say for this year as if it'll be the only book I read, but I've got Peter Lynch's One Up on Wall Street. I know it's quite an old book, but I figure there should be some good advice in there, and it will help nurse my downtrend that I've certainly had in the last year, which I was talking about. And yeah, as I said, according to Freetrade, it would suggest that I'm down significantly in the last year. When you look at a more full year view, not a full year, but as in my full performance overall, it does seem to balance a little bit better, but does suggest that I'm significantly underperforming the markets. But then again, Freetrade tracks its performance. It's well before I put a deposit in the account, literally since the bottom of the market. It's a very unrealistic benchmark to top, that's for sure. But it's understandable. I think it's perfectly normal that someone may underperform the markets in the short term. I've only been investing for something like less than 2 years. I believe it was a year and 8 months. What am I meant to prove? I'm not meant to go from the start, yes, this is how you do it, I'm going to make all of this money like this. The whole purpose behind my channel is to show you, hey, look, I don't exactly know what I'm doing, but I'm learning along the way, and all the mistakes I make and the lessons I learn, I therefore share with you, the viewer. And so that's the whole goal here. It's not here to, brush an ego and be like, hell yeah, I am the best investor. Like, 'cause it's just not how it is, and everyone has their own investment strategies. Which brings me on to some of the hate comments, because they are quite amusing. Some of them are hate, some of them aren't, some of them are more of a joke, but it is something I wanted to look at. This isn't actually on it, but it did make me laugh, and my microphone does look like a steering wheel. I don't even know if it's on screen today, but it is there. I'm ready to drive, as you are. But Nick had commented, haven't you lost enough money? Your advice seems to have lots of flaws in it. Fundamentals are not the full story. I'm going to stop there. Fundamentals are certainly not the full story. There is a lot more to a business than just the fundamentals, but it is the first thing that I would look at. Immediately, I'm going to look at a company to regard if it's worthwhile as an investment is their balance sheet. Have they got a nice amount of cash? Have they got limited amounts of debt? And overall, do they hold net cash, meaning they have more cash than they have debt? That is a positive sign that I want to see. Then I want to look at their past performance, their financials. I want to see, is this company profitable? Is this company predictable in growth, or is it very up and down? And I'm not quite so sure what's going on. And then furthermore, then I would look more into the growth of this over the time, how they've done, and then I would look more into the qualitative information, which is not your fundamentals. This is, how is the business? What are the opinions of some of the customers? How do people feel about the brand? Are some people concerned about perhaps the ESG, and like Boohoo in particular, or do some people not even know about these like modern day slavery accusations and they continue to buy these products? This is all very valid information. It goes into another point, which I will be making a video on, is why I only invest in UK stocks. It's naturally because I have an advantage here. I don't travel to the US. I've never been to the United States in my life. Why would I go there and try and pick companies if I don't have a greater understanding of the culture? I don't really follow many people from the United States unless it's something that's just a distraction for 5 minutes, so it's not worth me trying to punt at what companies I think are going to do well based on how well they've done in the US and the euphoria that's over there. I prefer to stick in the UK. It's not a form of patriotic bias. I'm simply using what I see as an advantage. The fact that I live in the UK can give me a one-up on other investors, perhaps more foreign investors, that don't quite understand the businesses or how they are performing amongst the culture here in the UK. But obviously, in that mind, you would have to be traveling a lot. You would have to be doing research. You can't just go, oh, I live in this country, so I understand it far greater than anyone else. You've got to do the work, but the point still stands. I should have bought BP shares for a dividend. Well, I did hold BP in the past. I also held Shell. I didn't understand either of the businesses, even though I felt like I did. Big oil, just not for me, and their transition into renewable energies. It's frankly speculation on my behalf. I have no superior knowledge of that, so why would I invest in something that is clearly not my strength? If I was trying to learn perhaps in that specific industry, it would just be a really strong weakness and not something I think would be advantageous when investing in the markets, especially when I'm after more growth. I'm not after a mature business to suddenly really grow their fundamentals by such a large percentage, because at that point they're mature, they're already paying out large dividends. I'm not at the age where I would like to receive dividend income or use that dividend income to draw off as an income to supplement my retirement or something, so it seems a little bit pointless to me. And cash out so you don't lose any more money. The last line, obviously I've butchered the delivery. It was quite a well written poem by the looks of it, but obviously I've butchered it out. I need to cash out now because I'm underperforming, and because I'm underperforming, it means I will never ever outperform the markets. That's that cash out. That would mean that basically I shouldn't have a channel anymore because my content is pretty much dedicated to investing, and it would also mean that I don't get a chance to even try. All of the stuff I've learned the last 2 years would be a waste. I'll have to go and do something else, maybe something to do with hair, because that seems to be something that I've got quite a lot of and nothing else at the moment. And so it just, it is what it is. But maybe it's from a good place, maybe cashing out, maybe they're in pain that I'm truly, or maybe Nick is truly hurt by the idea that I might be losing money in the short term. Also got Super Ray, he's mentioned that he'd hate to have a balance sheet like mine. I mean, that's understandable, to be fair. If you think about it, my total assets, I believe something like 90 to 95% of my total assets are invested in the stock market, and my stock market returns at the moment, something like down 30 odd %. So it's not looking too promising, that's for sure. And so I don't say I would hate to have a balance sheet like mine, because in my situation, I do have equity. I'm only 22 years old. I would very much question how many 22-year-olds have equity of over 5 digits in the stock market, and then see how that is, because at this age a lot of people haven't even started investing yet. So I'm not sure I would hate to have a balance sheet like this. If I was 21, 22, I'd be happy enough. If I was even like a year or two younger, right, I think I would be happy enough to have some equity in the stock market and not worry about the performance. And ultimately, this is the value of it. I feel that by underperforming in the earlier stages where I don't have a significant level of wealth can be advantageous for the longer term returns of the portfolio. As I make these mistakes now, as I learn from these critical lessons that are laid out for me in the stock market, I can then use these to learn from it, create opportunities out of these negatives in the portfolio, and then over the longer term, when I'm perhaps making more money, depositing more money, and have a larger portfolio, I may be less likely to make the same mistakes, and therefore not likely or less likely to underperform the markets on a consistent long-term basis. So hopefully I would do better over the longer term where I have more money invested in the market. That would be my logic behind it. There would be no reason for me to cash out like before or really disagree. Or Robert has mentioned this video is flipping wonderful. A year on and the price is down 65%. World-class share trading, pal. And this is on my Boohoo to reach 1,000, which was 1,000 pence, not 1,000 pounds, by the way, video where I was saying all of the bullish reasons for the company. At the time, they were growing at a phenomenal rate based on their revenue, and they were doing very well amidst the pandemic. At least my portfolio value is still higher than that amount, which is something at the moment, seeing as it has fallen on itself. Robert is a prime example of the hindsight investor, someone who goes, you should have done this after it's already happened. There's no real value that I've gained from this. In fact, it's just someone saying, I told you so, without telling me so, but instead coming after and going, yeah, of course it's easy to win Sunday's lotto with Monday's newspaper. I could have won the lottery over 1 million times if I had the results to them in the past. Like, it's pointless. What do you gain from that? But nonetheless, it was quite amusing, and I'm sure that it came from a very good place, but not hopefully anywhere where that surname is. Jonathan has mentioned, what will you lose money on next? Well, if I was that skilled and I knew exactly what I'd lose money on next, I don't know if I would be mentioning it on YouTube. I think I would be very cautious of where I place my money, and I think I would be a much more paranoid person in general. But hey, I've lost money. Well, I've not even really lost money. The only money that I have lost is the proceeds from the Argo blockchain transaction, which I did lose about 50% of my investment, which is a high amount. Do not get me wrong here. I think the initial investment on Argo blockchain was about £7,100, equivalent to 4,001 shares at an average price of £1.87 each. I've recently sold all of these, and I believe the average price I had sold these shares was around about 94 pence, which is basically bang on half of the original investment. And so yes, I've taken a 50% loss on this investment, and it is a concern. And furthermore, who was it that mentioned? Yeah, and RJ mentioned, you now need almost 50% gains just to get the money back. Now, he's talking about my overall portfolio here. Anyone who watches your channel must like to see someone in pain. It's not for stock tips. Brutal. Well, that's part of it, right? I wouldn't not be transparent just because I'm underperforming. The whole point of my brand is transparency, and I try to be as transparent as possible in that regard. The idea behind it is not that I'm hiding my losses or pretending that I'm winning big to facilitate a huge ego. There's no place for that in the investment markets. Instead, I'm showing you exactly what is going on in the portfolio so that you may understand it and learn from it yourself. And a classic one about Argo blockchain from Malcolm: Oz, for God's sake, hold ARB. I told you before, been talking to the van driver and also the cleaner, had a lot to say. You'll never lose until you sell. I can't, as I've mentioned before, base my investment strategy based on talking to a van driver and a cleaner. And in fact, I now no longer hold this share. I could have sold at the bottom, but it is what it is. I don't understand the underlying business. I don't understand Bitcoin. I don't know why it may grow and why it may not. Twitter in particular has shown that it is just people that are getting a bunch of likes on a tweet that just says, Bitcoin will be the future. That's it. That's the tweet. And then they've got 4,000 likes and it's trending because there isn't any value behind it. There's a few of them, but they'll repeat the same stats. Oh, wow, look, the Bitcoin mining pool has increased. Look at the total hash rate in the current mining pool. It's increased. Yes, of course, you can gauge something from that, but it doesn't say what the underlying asset is doing, if it truly is an asset. And so it's just not something I'm interested in. I acknowledge that was a mistake I made. I invested in an industry that I did not understand. I lost 50% of my capital. I've now sold out, even if it is the bottom, because I believe the best choice here is to reinvest that money into companies I do understand that are simple to understand. I could explain it to a 5-year-old if I wanted. And now if we double check my performance with Argo blockchain, just to make sure I was correct, my average price was about 188. My average sold was about 94 pence, give or take. The realized gain or loss is wrong, but then again, it is important to mention about 1,000 of those shares I made a profit on because I bought at £1, sold it around £2, and so it's very complicated, if I'm honest. Very, very complicated. Overall, I'm underperforming at the moment. Yes, it's a year and 8 months in, I'm underperforming. So what? I'm not planning to give up. I'm not planning to ignore my losses, but I'm also not going to let it beat me up. I'm a content creator on this platform. I'm not going to stop just because someone has told me to. And quite frankly, my business model on YouTube is based on my portfolio. So if I'm underperforming, I'm not going to stop just because I'm underperforming. I'm going to continue to make content on it. Anyway, I hope you have a fantastic year. And if you're interested in my investment strategy for 2022 and my plan on how I may outperform, then click the card at the top right of the video. Thank you for watching. Have a fantastic new year.